All right, everybody. Good morning, good evening, good afternoon. My name is Navin Prithyani. For those of you guys who do not know me, I am the founder of urbanforex.com, and I'm located out in Dubai. And I've been pretty much doing private webinars and public webinars with FXStreet for now a little over 5 years. And the topic today that we want to talk about is how do you get started in this market with price action? Like, okay, the thing with a lot of the people when they come into this market, there is a sort of this understanding of I want to answer one question and one question only. That is, how do I make the money and how quickly can I do it and what's the shortcut? Right? Like we all go through that, right? And that's the generic way to begin. So you might be pulled into this industry by watching the movie Wolf of Wall Street. You might be pulled into this industry by seeing crazy numbers and Ferraris and this and that on Instagram. Whatever your case is, whatever your reason is for being in this market, today what we're going to talk about is something around that is, do we actually understand what you've just entered? Okay, do you actually understand what you're being involved in? Okay, so it all comes down to getting a thorough understanding of what you're about to deal with, getting a thorough understanding of who the players are, and more importantly, when you call yourself a trader, what does that actually mean? What is your job in the market? And more importantly, why should we get paid? What is it that we're doing that makes money? Okay, if I draw a trend line and that trend line breaks and I do a sell or a buy, is that what's supposed to make me money? Let me ask you, for the longest time in your real human life, how have you ever gotten paid? It's either you provided a service and in exchange you got money for it. You've provided time, in exchange you got money for it, or you sold a product and in exchange you got money for it. So why are we under this impression that in the financial market we have to draw something and then for that drawing we're going to get paid? So let's start there. Let's start there. So how many of you guys in this room would you say you have learned the process of so-called technical analysis or fundamental analysis of if this happened, then do that, and then money should come out? But have you ever asked the question, why should I do that? Okay, the how is coming at you all day long. How do you do this? How do you do that? How do you do this? How do you do that? How do you enter a trade? How do you get out of a trade? How do you do this? No one asks why. Why should I do this? Why is this important to do it like this? Will it work tomorrow? What if it doesn't work tomorrow? Does that mean it's bad? Will it work every time? Does it have to work morning, day, and night, or does it only work in the morning? Why should this thing that you're teaching me work? Okay? So far so good? Everyone with me? Is it starting to click in a little bit? We got to get into the right topics, because without this question, I'll tell you, because I've been in the industry for, let's put it this way. I've been in the industry since it started to become moving away from telephone brokerages to the internet brokerage. Okay, so some of you guys might be young and you probably don't even know what is a brokerage telephone style, which is you call in saying, I want to go long at this price, and then they will fill you in. Now it's all electronic. Okay, so back in the day, okay, Euro USD used to be 5 pip spread. And today, Euro USD is so highly competitive that spreads are close to zero, right? Or 0.5 and stuff. It shouldn't be zero, but 0.5 and so forth. If it's zero, that's coming out of your pocket somewhere, one way or the other. So keep that in mind. Okay. So now that you understand this logic, let's go a little bit deeper into it. Okay, let's go a little bit deeper into it. Is it okay if I start sharing my screen and I start drawing a little bit on the chart so we can sort of connect there, because what happens is no matter how I try to train you, okay, I'm gonna show you guys one thing, because sometimes it's like, well, I'm attending this webinar. I see a brown guy on my screen. Why should I listen to him? You know, there's a million people out there. Why him? Well, one thing's first is I've been around for so long. Forget that. I've got white hair. I'm not a new kid on the block. Forget that. What about a number? Okay. As of today, I might be one of the largest traders in the retail sector that has doing a big trade on a single position. And I'll explain to you what that means. So we're talking about 6-digit numbers out of a single trade, 6 figures on a single trade. So we're doing some research on that to see if I've broken any records or anything like that. But as a retail Forex trader, it seems to be one of the largest trades in the world. Okay, so I have some stuff to say and I want to see if it makes sense to you. Okay, that's all that matters, because if it doesn't make sense to you, then it doesn't matter who I am. All right, so it's got to make sense to you. It's got to click. It's got to go in. Okay, so as I go into the charts, I don't want you to start thinking of, okay, so what do I do? How do I make money? You need to calm it down. What are you doing? What did you just get involved in? You got to understand the land. Okay, so let's first understand this thing piece by piece. So I'm going to share my screen. Let me open it up and let me see how to do this. Okay, screen share. Let me get this thing open. Where's my chat? Give me a second. I'm just looking for the chat box. Where is the chat box? Sorry, so I can see your messages as well. I don't. Give me a second. Where did I? Okay, I see it now. I see it. All right. Hi, Pramatama. How are you? Welcome to the room. David, how are you? Is there any chance to ask some questions in the end of the webinar? Why at the end of the webinar? Ask me. Ask me as we go along. Okay. One of the beauties that we have, being with FXStreet, is we try to make these webinars interactive. Especially if it's like the premium webinars, the private webinars that we do at FXStreet. Because they're so small, it's like you can ask the question live and you get a response back. So feel free to ask. I know this is a public webinar, but feel free to ask. We'll answer the questions as we go, and whatever the question is, I'll say it out loud so everyone hears it, and then we'll tackle it accordingly. Yeah. So don't feel bad. Ask away. Okay. So let me put the chat here so I can see the chat, and I'm going to start to draw now. Just let me know if you guys can see the circle. Can everyone see that? I'm gonna draw a little smiley face. Is that pink circle and smiley face visible to everyone? Yes. Okay, fantastic. Okay. All right, so first things first, let's take a look at what is up on the news. So this is a app that we have developed. It's called Market Countdown. It's free. It's available on the Mac App Store. Let's just take a look at what's coming up. So we got retail sales coming up for the CAD in 20 minutes. We have Euro conference in 15 minutes. And then we got Mr. Powell speaking at 5 p.m. my time here in Dubai, but in 15 minutes as well. So we got some movement coming into the market. Now, the reason why I bring this up, okay, you've got calendars everywhere. FXStreet's got a wonderful calendar as well. You can look at it on there. Wherever you can, I highly suggest you have access to a calendar. And now you might be wondering, why a calendar? Why do I need to know a calendar? Because let me ask you, let me paint one thing first. Let's get some of the basics down as perfect as possible, okay? As perfect as possible. All right. Okay, by the end of this webinar, you guys should be some rock stars of getting started into the market in the right way, okay? And that's the goal and that's the aim. There you go. Thank you, FXStreet, for putting that in. So the host has put in a link for you guys. You guys can bookmark that. So it's a very, very good place to see all the events that are upcoming. Okay, the ones that you want to be interested in are the ones that are medium and high impact, okay? And obviously if something is closed and it's off. Okay, so let's start with some of the little bit on the basic side of things, and when we'll gear ourselves up. So why do we need to know these events? Sorry. Why do we need to know these events? It's because events equals movement. Okay? It equals movement. Now, this, in a market, it's not a game of if the market is going up, I draw a line like this. If the line breaks, I sell. Okay? So now, can I ask all of you guys one question? Do you guys like a nice, I don't know, Mercedes? Do all of you guys in here like a nice Mercedes? I'm just making a random example. Okay? Do you enjoy a Mercedes and if it's coming your way? So let's say you want to buy a Mercedes, okay? And the Mercedes cost is $50,000, okay? The Mercedes cost is $50,000. Now, if the Mercedes cost is $50,000, you might have a budget on where you want to buy this. Okay, you have a budget on where you want to buy this, and let's say your budget is $45,000, and you're like, that's the best I can afford, and I personally believe the Mercedes that I like should be worth $45,000. That is what I think it's worth. But right now, the quotation of the Mercedes is $50,000. I'm not paying $50,000. Okay, so all of you guys are thinking that. Then something happens in the market. There's a shortage. There's a shortage. A manufacturer says, due to an issue in one of our factories in Germany, we had to close it down. Now we only have 20% of the factories operating. We can only produce so many cars. We cannot produce that many cars. What do you think is going to happen to the price? Will the price go down or will it go up on all the remaining stock? It will go up. Now, let me ask you a question. When prices go from one price to a price higher, is it going up because someone is hitting the buy button? Is that what happened in this discussion that we just had? Is it because someone hit a buy button? No. It is because whatever stock is left over and plus the increase in demand makes people say, you know what? The current price is this much. I will give you this much. Please give it to me. Then you might come and say, forget that guy. I will give you this much. Please give it to me. The next guy comes in and says, I will give you this much. Please give it to me. In this conversation, did anyone get it? Did anyone who's bidding the price and raising the price higher, did they get the product? Or is the product simply going up in price, but no one got it? This is an important piece to understand. When a price goes up, it is not because someone's hitting a buy button. When the price goes up, it is not that demand has increased. It's also because of that. But it needs to understand in your mind that people really want it, but they can't get it. People really want it, but they can't get their hands on it. This opens the door of an opportunity for you. This is the opportunity for you. When prices move, so now, if the prices are here at $50,000, okay, and the prices are now $50,100. Then the price goes to $50,150. Then the price goes to $50,100. Would you say the demand is hot, hot, hot? Would you say, oh my goodness, my people are going to kill each other for this product? They're dying to buy this. Does that feel right to you? Or would you say, there is demand, but it's okay. It's okay. It's not that much. Can everyone hear me? One of you guys are saying no sound. Is the sound okay? Sound is okay. 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 David, you're saying it's told we cannot move the market. So how can we figure out which price is best for a certain day? The biggest mystery for me at the moment. Good. Let's solve that today. Let's solve that. So I'm gonna repeat that question that was mentioned. So it's been told we cannot move the market. That is correct. At a retail level, that is correct. So how can we figure it out? Which way price? How can we figure out which price is best for a certain day? The biggest mystery for me at the moment. Do many of you guys agree with that? That it's a mystery. Like, what am I supposed to do today? Right? Is that something that many of you guys might be struggling with? How do I know this is where I should put my interest in? So it's like this. So as we're talking about this piece right here, okay, as we're talking about this piece right here, prices are rising, but they're not rising dramatically. What happens if the car you wanted is quoted at $50,000 and you're like, yeah, it'll probably go up to 50,100, 50,200. But you wake up in the morning and the price is $75,000. How do you feel about the demand now? So it is not just that the price went up. It's also how fast did the price goes up. That paints a different picture. Notice everything I'm teaching you guys right now is no charts so far. I need to bring back this logic to you before I take you to the charts, because if this logic is not there, there's no future in trading. Trading is actually true business back and forth. That's all it is. Okay? The word trading comes from the ancients who used to sit on a boat, go to one island, buy something for a cheap price, and sell it in another island for a little bit more. That merchant was called a trader. That was his job. That same word is now called a trader electronically. All you're doing is taking one thing from here for a good price and selling it here for more expensive. Do you care for the product? No. The merchant who's buying these things, whether he's buying spices or gold or copper or bronze or shoes or handbags, they really don't care for the product itself. What they care about is, what does the other island need? Not what can I buy? You can buy anything. What does the other island need? Once you identify that, then you go find a good deal for it, because you know you can sell it for more expensive. You don't do it the other way around. You don't just buy anything and hoping you can sell it for more. Is everyone with me so far up until this point? You don't buy anything just because you can. You buy what is in demand. You have to buy things that is required in the market. So when the price goes from 50,000 to 75,000, and then you look at it later, it goes to 90,000. What can you tell about the market for Mercedes? Are people going nuts for this product? So now the question comes in is you. This is you. Okay? The wonderful stick figure who's doing extreme dieting to look like that. Okay? So this is you, right? You're a happy guy out here and you're seeing this product of Mercedes rise up in prices, but you know the speed it's going up, people didn't get the car. They didn't get it. It's going up so fast, that means there's unfulfilled potential in this. So what you want to do is, now you understand there is a demand for this, excuse me, there's a demand for this product, and you want to see, can I get this for $77,000? Can I pick it up for a little bit cheaper? A little bit cheaper. I know it's required. I want to get that price cheaper. And when you do pick up the price cheaper, what is the chances that the prices will go back up to 90,000 for you to sell it? Are the chances low or high? Are the chances low or high if you get your hands on the Mercedes for $77,000 and you know there was a lot of people who really wanted this thing? Can you get rid of that Mercedes by making a difference between $77,000 and $90,000? Can you offload it to someone who says, Just give it to me. How much money do you want? Give it to me. I really want this product. Okay. If everybody is with me so far, chances are high. Good. I'm going to draw this out now. This is how it looks like on a chart. Okay, that is the visual representation of what just happened. It has nothing to do with how the design looks. It has everything to do with, do you understand what just happened? The design means nothing. Okay, so if I draw a line like this, that is not the reason to buy. The reason to buy is you know that this is a product that people want. And now this pattern, this drawing makes sense. Okay, now you can entertain that style of trading, but you gotta know, am I going to do something in this market? Is that making sense? Is it clicking, guys? Are you having some aha moments? Is it starting to piece by piece come together a little bit? Now, all of you guys understand iPhones, right? Okay, we'll just give a simple example. Everyone understands a iPhone. What's the latest iPhone out there right now? Okay, let's see how you guys understand it. What's the latest model out there right now? Okay, so, okay, a lot of you guys are saying yes, you guys are with me, you guys understand. Good, good, good. Okay, so the latest model out there for the iPhone right now should be 15, 16? I don't even remember. 15. Okay, some of you guys are, okay, Rise, you're saying 15. Excellent. So it's 15 right now. Let's say tomorrow, the 16 is due to release, right? 16 is due to release. Is Apple products high in demand? Is it high in demand? Absolutely. It's high in demand. If the 16 releases and Apple says, you know what, we're going to release it only in the US first, what do you think the rest of the world is going to do? They're going to say, somebody get me that item from the US, I'll give you $500 more. I'll give you whatever the price you paid for it, I'll give you $1,000 more. Give it to me. I want it first. You guys understand that logic, right? Everyone understand that logic? So if you stood in line and you said, I know Apple's got 1 billion pieces, but at this store, and due to the shortage, I can at least get 10 because that's all the money I have. I can buy 10. But that's my risk. I'm buying 10, but I know just across the street, I can get rid of it. I can sell it to someone who's saying, I'll give you $1,000 extra per piece that you have. And you're like, fantastic. What you just did is this design. What just happened is you played that design. Now, since everyone is with me on the topic of iPhone 15, and you got a good deal, so you got rid of it at a better deal, right? Can you do this with an iPhone 12? Can you do this with an iPhone 12? If one thing for certain is, can you get it at a discount? Absolutely. But can you get rid of it for $1,000 more than what you paid for? Demand is not there. So just because you can buy it, it doesn't mean it's a good thing to do. The ability to buy it means nothing. You can buy anything you want. You can buy a penny stock. You can invest in your local restaurant. It means nothing. Just because you can, it doesn't mean it should. Is that making sense? So what you need to position yourself is get good at understanding, where should I put my money first? You got to get good at that. Okay? Because getting in is not a problem. Hitting a button that says buy is super easy. That's not a problem. That's super easy. It just takes one finger to go down on your mouse. The question comes in is, should I do this? That's where the engine starts. That's where the engine starts. Up until now, what questions are coming through your mind? What questions are coming through your mind? Because I know this stuff makes sense to you at your core. You've done this all day, every day since the moment you were born. You do this in the real life, but when it comes to the markets, for some reason we all forget it. For some reason, there is a different mindset when we come into the market. There's no need for that. There's no need for that. That's why I'm asking you, what's different in the market for you? Why is this logic not absorbable? And why is designs and indicators and all these things so much more appealing when you actually at your core understand the market? At the core, you all understand the market. But you got to use that knowledge that you already have. You have to use it. Okay? And not listen to anyone saying, you know, when you draw this line and that line breaks, and then you sit on the other side of this line, and when the price comes down to the other side of this line, and if the price is turning around and you have you're going to trade 2% of that and this and that. What? Since when did we become robots? And we say we cannot think for ourselves. We need someone to tell us what to do. When did that happen? This market is you. The prices that are going around is you. All those things are a collection of you. So why have we forgot what to do? Okay. All right. So Ola, you're saying, will your CAD yen trade continue to the upside? Absolutely. This is a monthly move for me. I'm looking at currently the trade's running for approximately $100,000. Sorry, it should be less now. I think $90,000. I am expecting this to go further higher for another at least $250,000 to $250,000 for this particular trade. So, like I said, this trade is one of the largest trades done out there. It's beaten a lot of metrics such as drawdown, the stop loss, the monthly movement. Being a forex trade from a retail side of things, it's unheard of doing these type of numbers. So I've gotten in 7 days ago, Ola. David, your question is, the biggest issue for myself, guys, is when it comes to price drop and be prepared to buy, I'm in the trade too early and price goes even further down and stops at some point. Then starts to go up after hitting a stop loss. Any cure to solve it? Oh, yeah. You guys want to hear the trick to that? You want me to give you a secret on how to deal with that? I can fix that problem before the webinar ends in the next 15 minutes. You guys want to know how to do that? Okay, let me show you. Let me show you. Okay, good question. I'll show you. All right. So let's say you're in a trade, right? Okay. So now the prices are going up, 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 up. Okay, there's demand for this product. You know you want to buy this because you know the demand is hot, hot, hot. Now the price comes down. Okay, the price comes down. I want you to look at that as you are now the seller. Forget the buy. Okay, you want to buy, put that aside. You want to buy, put that aside. Right? For now, you are a seller. Prices smashed down. How do you feel? Fantastic. You're in the sell. You feel fantastic. Prices struggle to go up. How do you feel? Fantastic. Prices make a new low. How quickly did the price drop? Did it drop fast? Did it drop slow? It dropped fast. How do you feel? Fantastic. Now, it starts to pull up aggressively. And then it slows down here. You're worried. But you're like, huh, but it's still better than it was before. How do you feel? Okay. Now the prices start to move down, but they're going down like this. How do you feel? Do you feel your trade performance is fantastic? You have more money than before, but how do you feel the whole way on this last move down? Following that, if you see a buyer do this, are you going to panic? No. Prices go down further. How do you feel? It's so slow. It's so nasty. I'm a little bit worried for this. Boom. Are you going to hold on to your sell side, or are you going to start getting ready to get rid of it? Notice the difference between when this buy happened and when this buy happened. Don't focus on the green candle. Focus on the story that led up to that green candle. Were they in pain and worried, or were they absolutely satisfied? If they're absolutely satisfied, the buy is not yet. Get them to sweat. Get them to worry. Get them to, their complete clothes are sweating like, oh my God, I don't think this can go any further. Oh my goodness, this is coming to an end. And then wait for your buyer to show back up. Wait for him to show back up. Don't hit it. Don't assume he's going to show back up. Let him come first. And then you have a green light that says, we are now approaching an area where this might be the bottom. David, did that help? Okay, David. So, okay, what I shall do next is when the launch green candle, let the price drop a bit. Let the price drop. Let the price drop a little bit and go for buy. Then, you want the price to struggle. Okay, so what makes something go up? Okay, let's talk about that. What makes things go up? First thing first is, there's a demand to the left-hand side. Everybody wants to buy. You want to buy, I want to buy, Amr wants to buy, Ola wants to buy, David wants to buy. Okay, everybody wants to buy, okay? Now, a price has just come down very sharply, very, very sharply. Now, all of us who want to buy, we will look at that and saying, the price was $50,000, and overnight, not slowly, not everything, you wake up in the morning and price is at $20,000. How crazy are you to buy that $20,000? 9 out of 10 times people look at that and say, I wonder if I can get more discount. I wonder if I can get more discount. Prices don't go up because people are thinking I can get more discount. And then discounts come in further. How was that speed of that discount? Slow or fast? The buyer is still not interested. The buyer is still not interested. So think of it like Mercedes cannot find a buyer, so they're dumping the price. They're dumping the price. No buyer is looking at a buyer saying, hey, if it's going down, let it. I'm not going to complain for a discount. Let it come. More discount, please. But when the discount stops coming in and it starts to struggle, think about this as the buyers are now thinking, crap, looks like I'm going to have to get in on this because the discounts are not coming in. Now, stay with me. Don't go crazy in what you think you know. Stay with me right now. As soon as the discount starts slowing down, tell me, why is the discount slowing down? What do you think the store knows? Why would the discount slow down? If normally the store is giving you 50% discounts, exactly. The store knows there are buyers here somewhere. Now, if the buyer comes in like this and they're willing to pay more and more and more and more, as a store, would you give a discount? If you were the store owner and you noticed that, would you give any further discounts? No, you wouldn't. So now let me tell you, if you see this, it's going to launch. Because there's no seller left. He's not going to give you a discount. And only thing that's left is buyers are going to have to step in and take that price because that's the last discount they're ever going to get, ever. That's the launch area. That's where it's going to take off. Click, click. Is it going in? Is it making sense? So if I draw now a line like this and I say, you know why it went up? It's because that trend line broke. And since the trend line broke, this is on the other side of the trend line. That's why it went up. Is that really why it went up? You tell me. Is that really why it went up? Absolutely not. Because I can do the same here. It broke. I should buy it here. It's not going to work. So you can draw whatever you want from your fantasy. It's got to have a logic. It's got to have logic in the basis. You cannot just do things just because you can. You have to understand, what am I doing? What am I playing? Okay, so now in this entire process, did I at any point say, you know, this is a Fibonacci sequence of 23%. This is a Fibonacci sequence of 50%. Or did I root you down into the reality of what's actually happening? Because if you're going to wait for a 70% discount every single time, well, good luck. You're going to be waiting forever. You'll get it once in a while. You're not going to make any money because you're unable to adapt. You're just being strict on saying, I only want this price. I don't care. That's not the way business is done. You have to negotiate. You have to negotiate. You have to understand how much can they, how much will I? How much can they, how much will I? And that rhythm, you have to read. You have to read that rhythm. Now, whether some people call this momentum and stuff, because everyone wants to turn it into a pattern. Don't make it into a pattern. Try to understand, what am I looking at? What does it mean? Why is it going up so fast? Why is it coming down so fast? What does it mean? Making sense? Making sense? Okay? If you want patterns, I can draw patterns all day for you guys, but that's the wrong way to train you. You're going to make more losses that way. I don't want to do that because that's the incorrect way to train someone. You got to know the basics. And the best part is you know the basics. I just have to make sure you understand it on a chart. But in real life, you know the basics. It's nothing different. You know it. You've known it since your childhood until now. Okay? David, is there a chance that store can go even lower to potentially find more buyers? No, not necessarily. Not at this point. Okay? I'm going to show you something here. I want to show you something here on the monthly here, okay? Now, look at this massive seller here. Sorry, where is it? Here. Look at that massive seller there. I'm a buyer, okay? And I see a discount like that coming in. Now, notice the size of these candles. Notice the size of these candles. Are they big or small? Are they big or small? Okay. First things first, understand the word you just used. You said small. Did you have to memorize small means 80 pips? Small means 50 pips? Small means 20 pips? Or was your instinct looking at that and looking at the surroundings saying, it's small? Don't reduce your IQ to a pattern. It's correct. You're saying small because you're observing it to this. You're observing it to that. It's because of that you can classify it quickly as small. That is your brain telling you you know how to negotiate. You can understand the situation you're in. You know how to do it. You know how to do it. Okay. So you're saying it's small. So when the discount comes in, is the discount big? Is the discount big? It's big. It's a massive, massive discount coming in. So as a buyer, if I'm the buyer and I see this thing coming down, I would say, hey, I don't want to buy it. Perhaps they're going to give more. If they give more, hey, I'd like to buy it lower. Why not? Then I see the price going up. Interesting. Interesting. Huh. It went all the way to the top. All the way to the area where they started the discount. How strong is my buyer? Is that buyer strong or weak? That's a strong buyer. There's a lot of buy orders. The demand is coming in. Now, if you were the owner of this store and you just saw that, what would you do with the discounts? If you were the owner of that store, what would you do with the discounts? Would you continue to give me a discount? If I am the buyer, would you give me a discount? No discounts. Does this reflect that no discount process? Does that look like no discounts to you and saying no more discounts for you, buddy? That's it. It's over. That's a reflection of that. Now, if I am the buyer, I am now forced to step up and pay a premium price, a much more expensive price. Is that a 78% retracement? Is that a 50% Fibonacci retracement? Is that a 23% retracement? Is that a trend line break? Is that a moving average crossover? Is that a high volume this, high volume that? All of that stuff is not rooted in logic. What you guys just told me through these questions is you understand the logic of supply and demand. You understand the logic, what makes a trader. What is required? Where do I position myself? Who wants this? And how can I help? That's what you get paid for. Who wants it? How can I help? That's where the money is made. You don't just buy anything and saying, hopefully I make money. Not like that. That's not a trader's job. A trader is that merchant in the middle. The guy on the boat saying, what do you need? Let me go get it. What do you need? Let me go get it. If you don't know what they need and you're looking at what you need, that's not trading. Then you're just an investor. You're not a trader. You're investing and you're just saying, I hope this works. That's an investment. So far, so good? Okay, so now all of this stuff is what's created one of the largest trades in history, I would say. If we are breaking records, then you guys in this webinar can say, I saw it first at FXStreet. I understood it. I know what's going on. And I was there. I was there. As history is being made, I was there, and I know why Navin took that trade. Make sense? Okay, good. I hope everything we talked about today, it clicks in really well with you guys. If there's any questions, obviously, feel free to reach out to me at any time. My email address is navin@urbanforex.com. But for the most part, I want you guys to walk away from this webinar saying, I learned something that I can apply instantaneously. Don't just attend webinars after webinars and take no action. Okay? Learn something that you can apply instantaneously. So I really hope that this 45 minutes that we were together, you had a great time, and I truly hope to see you guys again. You guys have been a wonderful audience. Thank you for keeping this interactive. Brilliant questions, by the way, from all of you guys. I truly like that. So keep pushing, keep learning, because it's just the beginning. And don't forget, you know this at your core. Thanks a lot, everybody. Until next time. Thank you, FXStreet, for having me. Cheers. Bye for now.